On behalf of JB Nagar Study Circle, I'll welcome you all for the today's webinar, Do and Don'ts in Company Audits. First of all, I request to Arvind to start a video on ethics. Hello. Hello. I welcome CA Vishal Doshi, our today's speaker for the today's webinar. I also thank you him for accepting our invitation. He will guide us regarding audit precautions during the COVID-19. Today we also have with us CA Manish Gadiaji. I welcome him for the today's webinar. I now request CA Manish Dediaji to formally introduce CA Vishal Doshi.
Thank you, Simaji, for giving me opportunity to introduce today's well-known speaker, allied speaker who does not require any introduction to the gathering today, Sri CA Vishal Doshi, Vice Chairman WIRC for 2021. He is a partner in KC Mehta and Company, and he has been specializing from last more than 2 decades, 3 decades in the area of statutory audits, tax audit, internal audit, information system audits, due diligence, valuations, etc. He has been proactively engaged with our professional work as well as academic part of the profession, that is by giving various seminars and presentation of papers in the areas of auditing, accounting, IFRS, Ind AS, TAROS, enterprise risk management, etc. Apart from that, he is always serving the profession by being part of various boards of ICAI and WRC, namely peer review board, technical evaluation of function statement, member of FRRG2, He was also chairman for Baroda branch in 2005 and chairman of Vikasa for Baroda branch in 2004. Apart from his professional excellence, he has been very active in non-professional activity, and as a result of his various activities, he has been awarded highest award of Rashtrapati Scout Award by none other than past President of India, Sri K.R. Narayan. With these few words, I welcome today's speaker, Sri Vishal Doshi, and request Seemaji to take the proceedings ahead. Thanks.
If you want to address to the members, then you can.
Thank you, Seemaji, for giving this opportunity. Manishji has already introduced today's speaker, Vishal Doshi. Before the presentation, you have seen the video in respect of ethical standard. That is the brainchild of Vishal Bhai only. As and when he took over as a vice chairman, he came out with the idea that new ethical standard is going to be implemented from 1st July 2020, and we should guide to our members about ethical standard. So every meeting, every month, journal, they are publishing different provisions about ethical standard, and that what we convert, WRC convert into a video form, and it is disclosed and it is shown before each and every meeting to the members. That is a good initiative taken by him. And apart from that, you all aware that previously study circle was not allowed to conduct a meeting due to COVID-19. From last week, it has been allowed to conduct a meeting, but the restriction is of 300 members as far as study circles are concerned. So that Seema Madam has already communicated to you in the last meeting also that we will give CP only to the first 300 members, and beyond that we are not allowed to give CP. So all the members are requested to be on time or maybe before time so that they can get a CP. And as per CP directive, new directive, it is mandatory for every member to complete at least 2 hours of CP each on ethical standard as well as on subject of standard auditing practice, standard of audit. So just keep this in mind, and Seema Madam has already planned a meeting on these topics in the month of June. So you take the benefit of the same. So thank you very much, Seema Madam, for giving this opportunity. Over to you.
Thank you, Manishji, for sharing the views to the members. Members are requested to attend the meeting, and CP hours will get, we are marking the attendance, and CP hours will be get at the, we are marking the attendance at the end of the meeting also. So please leave the meeting after vote of thanks to the speaker. Thank you. Over to Vishal Bhai. I request C. Vishal Doshi to take over the session and guide us for the presentation.
Thank you, Seema Madam, and a very good morning to all the members of JB Nagar CP Study Circle. At the outset, I would like to thank my regional council colleague Manish Bhai Gadia to have given me this opportunity. And everybody is from Mumbai, I can say कि जैसे बॉलीवुड में किसी को ब्रेक के लिए you need some good source. Similarly for me in JB Nagar, I would say Manish Bhai proved to be that source, and he has given me this opportunity, I would say, to interact and share my thoughts and experiences on the topic. We were supposed to meet physically in the month of April, but unfortunately we are now, I would say fortunately we are still meeting, but unfortunately in a webinar mode where I can see just the names, and that also of 25 people on the screen, and the rest are in the background, I would say. So nonetheless, I would like to thank the convener CA Chintan Shah, the deputy convener CA Seema Madam Mehta, the coordinator CA Manish Dedia ji and CA Krishna Kumar ji also for this opportunity. Friends, the topic that we have on hand today It is with respect to do and don'ts in company audits. And we are all aware that in this COVID-19 situation, in this pandemic, most of us, especially I know of our friends in Mumbai, who are still not able to work from office or go to office. They are all still working from home, a majority of them. And maybe with the situation there, that might continue for a few days more. So in this situation, it becomes very, very important that the audit practice or the certification we do should not get compromised on the qualitative aspect, and we are able to deliver our best under the situation. Friends, we are all aware that the listed companies, the extension has been given from May to June. And so many listed companies have already announced their results as well as completed the audits. So I would request members not to get, first of all, bogged down with the situation and look up that, yes, there are these audits that are being done. Our office also, we are auditors for many listed companies where the board meetings are scheduled in the next week, and we have been able to complete the audits. It might not be the same 100% satisfaction that you would have because we have been following a particular practice for n number of years, and a sudden change is definitely going to impact our processes and maybe also have an impact on the way we perform our assurance. Friends, this is what I had suggested in the beginning. I would, if I recollect, in the first week of April, with all my friends and colleagues, our professional friends and colleagues, that even when you are working from home with respect to audit and assurance, there are many activities which we can still carry out. Why I feel that this I can discuss today also, because like I said that in Mumbai, there would be many practitioners who would still be working from home, or maybe even if the office is open, because the public transport does not open, a majority of the employees would still be working from home. So what are the activities that we can try and delegate in this situation? If I start from the right, that is my right. First is about the engagement letters. Friends, let us all be very candid, and I am aware that a majority of us practicing chartered accountants, we don't have this process of preparing the engagement letter with respect to our audit clients. Mind you, whatever I'm saying right now is with respect to audits only. And I believe that this is the right time for all of us to see to it that we get our permanent files ready. We get we prepare the engagement letter. I'll show also a draft, and if members want, they can connect to me. I can share the draft with them also over mail. But this is something which we can do, and see, engagement letter is something that is not required every year. In case of company audits, we have got our appointments which are now for a block of 5 years. So the same engagement letter you would be in your file for 5 years if there are no major other changes to the engagement terms. And therefore, I believe that this is the right time that if you have some employee or an article in office, you can give the list of clients and tell him, give him the draft of the engagement letter and tell him to prepare all the engagement letters for you. So this way we can utilize the time. Standardizing formats and masters. See, significant accounting policies, the accounting standards applicability, the engagement and quality control standards applicability. See, all these there are checklists which I will share also. And these are the things which I believe that each audit file, friends, we are all aware that now the audits have become more compliance oriented. It is not like we used to do earlier. And let us all be very candid that it is not that only the listed companies, we feel, at least I feel that it's not only limited to listed companies, it can come from anywhere. Any regulator can now come and ask for your records, your documents, and if your files are not complete, then definitely there would be some issue with respect to the qualitative aspects of the audit. If we move to the left, with respect to the financial statements for the year 2019-20, what can we do? See, I am aware that many of the practicing chartered accountants themselves are helping or assisting the client in preparing the financial statements, the balance sheet. We have to give comparative numbers for each year. So the best thing we can utilize the time of our staff is that give them the March 19 financials, tell them that you convert this into March 20, matlab March 19 financials you take into the comparatives for March 20, so that that template is ready, and you would save time later on when you start actually preparing the balance sheet and the financial statements. Even the opening balance from the trial balance can be prepared, because many of the clients would be able to share the data with you, and that would help you in verifying the opening balance before you start the actual audit. So these are some of the activities which I believe that even for work from home can be carried out by members, which would ensure that their staff does not sit idle. The work pressure for the later days, when the actual compliance calendar starts taking it, then because this year we might need to invest some more time into the actual audit activities, and therefore if we are able to cover up these activities, these repetitive activities, I would say beforehand, then that would save a lot of our time and efforts at the later stage. Friends, I would cover my presentation mostly for the non-Ind AS companies. Listed companies is a separate ball game. So many of my slides and the lists I say would be related to the non-listed companies, which might be SMCs or non-SMCs, but which are into non-Ind AS. So before the audit, what do we need to ensure? First is the appointment letter. We need to ensure that we have that in our file along with the ADT1. If the appointment, like I said, normally the appointment would be for 5 years. But if it is not for 5 years, it is for a period shorter than 5 years. And if there is a renewal that is due, then please ensure that the appointment letter is in your file before you start the audit. In case there has been a change of auditor, communication with the previous auditor is required. And we are all aware now that even an email communication has been permitted by the ICAI, and definitely subject to the email ID of the previous auditor being that which is the last official ID or the ID which is registered with the ICAI. So members can go through that announcement, but then this is something else which is required. Engagement letter, I'm again repeating, and I would here show one sample that I have of the engagement letter. You would see that we have engagement letters for LLP, we have engagement letters for tax audit, and I'll tell you why an engagement letter is important. This is a standard engagement letter that is there, which is as per the standards on audit, which we have in our, this is the template that we follow in our office. So here, what is important, see, an engagement letter is something like a contract between the two parties in a very crude way. If we see, it is like a contract between the two parties. And if we see this, then what it says is our audit will be conducted. So it talks about our responsibilities and what we would be doing under the audit, being a statutory audit, that under Companies Act we will be issuing our report and all. It also talks that what is the process we would follow. So we would conduct our audit as per the standards on audit, which is prescribed by the ICAI. And what do we need to report is that these standards require that we comply with ethical requirements and that the financial statements are free from material misstatements. That is what is the requirement under the standards on audit. So this also we are making very clear when we do an engagement letter. In the engagement letter, we also mention that there are certain inherent limitations of audit. And there is an unavoidable risk that material misstatements due to fraud or error may not be detected. So we are making our side very clear by way of this engagement letter that there would be certain things which might not come out because of the materiality aspects also. And then some very important clauses which we mention in our audit report, but ultimately this is also by engagement letter before the starting of audit. We are saying that the management is responsible for what? See, these are all the things where we say that the management is responsible for all these things. So this is a whole list of things about the policies and the accounts and the documentation, the records, even the laying down of the IFC. So all these things we are pushing by way of the engagement letter to the management. And that is very, very important. We also talk about what is the responsibility of the management in providing us with, with all the documents, the visit to the offices, all the records of the subsidiaries and anything, if there are any access to reports, additional info. So all these things, it is the unrestricted access to our persons within the company. For the audit evidence. And so these are the things which we are making very, very clear with respect to an engagement letter. We are also talking about a management representation letter that we will have. We will obtain that at the end of our audit from the company. So these are certain things which are very, very important, I would say. And again, a very important aspect, fees and billings, definitely. And also that about our liability, professional liability. You know, that except to the extent finally determined to have resulted from our firm's gross negligence or willful misconduct, then what is the liability to the company that we would be having? That is a very clear cut mentioned in this engagement letter. The company will indemnify and hold harmless the audit firm and its personnel from any claims, liabilities, costs, and expenses. We are all aware now, even under the Income Tax Act, the CA firm can be penalized. So here, by virtue of this, we are trying to put a foot into the client's place, that we are saying that you have to reimburse it because there is no negligence or a willful misconduct from our side. And even in case there is a litigation, we are saying that the company will reimburse us for the professional time and expense and fees and expense. So this becomes a very, very important document which is signed by the chartered accountant and the client both. And therefore, I would always harp on the importance of an engagement letter that is there in our audit practice. Yeah, coming back, my PPT is visible now? Or it's still the engagement letter?
Yes, sir, your PPT is visible. Engagement
Sure.
letter is
Right. So another thing, before the audit, we need to have the memorandum articles ready. Materiality limits. Again, this is another important working or a document which I find missing in many of the clients' cases, many of the professionals. I'll just share a simple matrix of materiality. I think this is very simple. Anybody can replicate it. There is no rocket science. So this is what we do in our office. Name of the client for the year 1920, the standalone financials of the last 2 years. And that is what, if you remember, I had said in my work from home thing also, that the materiality level limits can be fixed per client because you already have the March 18 and the March 19 audited financials with you. So you can take the total assets of the 2 years average and you can determine what is the materiality level you want to put. The total property, plant, equipment, and the intangible assets value, the revenue, and the profit. So these are the 4 parameters which we follow in our office. As against that, so what is the lowest of the above is 5 lakhs. Now, based on 5 lakhs, we have said the performance materiality of 3.75 lakhs. As per the standard, this can be anywhere between 50% to 90%.
Hello, Vishal bhai, sorry to interrupt, but
Yes.
PPT is not visible actually. Only index is coming on the screen.
The Excel file is not visible, is it?
Yes. Only
Okay,
index
okay.
is coming. First page is there only. Index page is there.
no only PPT. Yeah, Excel is visible.
Now
it is
Excel
coming.
is visible?
Yes,
Yeah,
yes.
yeah.
Now it is coming. Yeah.
Okay, okay,
Right.
fine, fine.
Thank you.
तो वो मेरे हिसाब से एंगेजमेंट लेटर पूरा ऐसे ही चला गया.
हाँ,
Don't
ऐसे ही
worry.
चला गया actually.
No problems, no problems. If time permit, at the last I'll take it up if members want it. Yeah. So this is the Excel file. So what we do is that we take for the last 2 years, we do the average, we apply a percentage of materiality that we feel is appropriate. And let me tell you, this, in my opinion, should not vary from client to client. As a firm, you keep certain standard benchmarks, and this is the materiality level that you have. So then you have is a performance materiality, where you say that this is, like I said, the standard says anywhere between 50 to 90%. We say a performance materiality is up to 75%. And triviality. What is triviality is that the misstatement below this amount, it may not be accumulated also. So as you are aware that our standards say that, if you have found, let us say in this case, 5,000 rupees is the triviality. Now, if amounts less than 5,000, you find 5 items or 10 items, and that, you can actually, because it comes below the triviality threshold, you can ignore everything which is less than 5,000 rupees and which should be in accordance with the standards on audit and the audit practices. So why I'm saying this, that, as far as vouching and involvement of some of the our time and efforts of our staff, our articles and staff in all these things is concerned, it becomes very important, that we tell them that anything depending on the size of the client and the materiality limits you set, you can say that these are the things which you should ignore at the time of vouching, at the time of ledger scrutiny and everything, because that is not a material amount, and even if there is an error or an omission with respect to those amounts, even from the accounting standards perspective and the standards on audit perspective, you are safe because it is below the materiality threshold. And 3.75, like I said, is the materiality, performance materiality, which means overall that as an entity as a whole, up to 3.75 lakhs in case of this entity, even if you don't make any adjustments or get any adjustments done, it is below the materiality threshold. So this becomes very important because you save a lot of your time and efforts in these things. If you keep these things ready, you can actually do some very good qualitative audit, or I would say even utilize that time in proper documentation rather than doing a lot of extensive audit which might not be required. Compliance checklist, this also we'll come to a bit later in a couple of slides. Why I'm saying compliance checklist is that because everybody of us knows that there are so many different limits with respect to applicability of different provisions on an audit for the Companies Act. Honestly, I tell you, I as an individual, I lose track, and the chances of errors and omissions are so significantly high that we have to keep these things under check and under control. During the audit also, friends, I would say with respect to accounting standards, which is though applicable to clients, but in case of small and medium enterprises, we are all aware that a lot of compliances is what we also assist them in doing. And therefore, it becomes very important that our team is aware of what are the standards which are applicable in case of that client, and at the same time, whether the disclosures with respect to those standards have been made or not. Even on the standards on auditing, so here also, I would just share on the accounting standards. If you can see this, there are level 1, level 2, these are the files. Now let us say a non-SMC. So this is a normal company. I am showing a PDF file. In case it is not visible, please let me know. So this is a checklist for accounting standards where name of the company, financial year, and the accounting standard which is applicable, we say yes, 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 these are applicable. And if it is not applicable, we give the reasons why it is not applicable. See, why I'm saying this is important is that when articles to students or other staff, they are working on an audit, it is very important for them to understand which are the standards that are applicable. And this is a document which is there in the file every year. So this goes part of our working file. And therefore, when you are reviewing or when you are getting involved at the last minute, at least you can go through this checklist and find out that if these standards are applicable,
Sorry, Vishal bhai, again interrupting you, but the PDF is not visible. It is not.
एक मिनट ये कुछ
Yeah, now it is okay.
Fine. I have understood the trick of the trade now. Yeah, fine. So I hope I will not now disturb you again. Yeah. So yeah, sorry. So this is what I was mentioning, that this is the checklist for accounting standards, and I would request all firms should have this. When you are reviewing as a proprietor, as a partner, it becomes very easy for you that if there is, let us say, valuation of inventories is applicable to related, whether the disclosures are there, whether the accounting policy is there or not. You can just have a quick review of that. If it is a construction company which AS7 is applicable, then whether the policy that is being formed up by your policy, I know it would be a copy paste of previous year. Let us be all very candid. That is what happens. But then as a matter of check, and see, many times what happens when we are addressing small and medium enterprises, we are more close to the owner and we are aware that he has started a particular contract or a particular line of business or something. And then it immediately should click to us that, this is an activity which he has started, but it does not get reflected by a new standard. Let us say that client has for the first time imported something or exported something. So in the earlier years, maybe AS11 policy would not be there in your significant accounting policies. And maybe the article has missed out to take this, but you are aware. And then you would say that, at a glimpse that, standards are applicable, why have you not checked this? Or why the policy is not with respect to this? So this becomes an immediate referencer for all of us, and it becomes very, very important. So similarly, when we say for small and medium enterprises, or I would say small and medium companies. So this is the checklist which is there. So here itself we have mentioned what are the conditions. And so, you know, your article or your anybody in your office who supports you in the audit can easily say, okay, yes, these are the conditions which are fulfilled, not fulfilled, whether therefore this is a SMC, this is not SMC. So at a glance, usko ye pata chal jata hai, and you did not open the accounting standards rules every time to find out whether a client is SMC or not or non-SMC. And then, you know, once you have this, then the checklist, the flow, everything becomes very, very simple. And I would say, see, here also we have given that what are the relaxations if it is a small and medium company. Then under the accounting standard rules, what are the relaxations that are there? So even for your staff and employee, this becomes a ready referencer that they are aware that these are the paragraphs which are not applicable. So I may not give the disclosures or may not do the workings with respect to such disclosures because for a SMC these are not applicable, and that would also save a substantial time of ours, because otherwise we are actually many times what we do is we pick up the financial statements of the annual report of a listed company. हम लोग देखते हैं उसने क्या क्या डिस्क्लोजर किया है, अपने ऑफिस में किसी को बोल देते हैं कि भाई ये आप कॉपी करके इसका बना दो. Now, if it is a small and medium company, then there are many disclosures which might not be required, for which we are putting our time and efforts. And let me be very candid over here, for which the client is not going to pay us anything extra. So I feel this is one way where we can definitely save a lot of our time and efforts. Coming to the compliance. So I have an Excel file in front of you. I know this looks very, very complicated, and it is complicated. And so what we do, like I said, see, there are so many, if we look on the right side, there are so many compliances which we actually need to monitor for a company, कि ये applicable होता है कि नहीं होता है. This is a list. I know, see, this is a comprehensive list with respect to non-corporate, Ind AS, and normal private limited also. This is an exhaustive list. But what we have done is that what happens, now let us take a case over here. Like I said, over here we filled up a private limited company, yes. So my client is a private limited company, and here I fill up all the rest of the criteria that it is not a holding or subsidiary, professional nahi hai, regulatory sector nahi hai, MSMED nahi hai, shareholders, all these things are mandatory to be filled up, which I have filled up. Now, if we look, see, if I talk whether it is a SMC or a non-SMC. Now, what the criteria are the, you know, turnover in the previous year. It should be more than 50 crores, then it becomes a non-SMC. So here I have said that if you look over here, that whether a non-SMC in the previous 2 years, I have said no, because that is one of the criteria that you have to be in that for 2 years. Now let us say in the previous year, right now I'm in 1920, and over here SMC it is showing as yes, right, because of the criteria. Now let us say turnover is 50 crores. So these are in lakhs. So the moment I say turnover has crossed 50 crores in the previous year, SMC becomes no over here. Right? So this is how we capture a lot of things to minimize the errors or the compliance, or I would say even the time at the senior partner or proprietor level. Because when we talk of, I know it is a very in lighter vein, I can say that when we talk of the billing rate of per hour of our institute, at the partner proprietor level, it is the highest, and I would not like my members to spend time on these things. Now, similarly, for applicability of CARO, over here, so you see CARO applicability is no. Now, the requirement of CARO is that if my loan is in excess of 1 crore at any point in time in the current year, then CARO becomes applicable. So now let us say over here, I put 10 crores as my loan amount, then you see automatically CARO has become yes. Right? So this is how we work, and I would request all members that, see, I have one file. So you can imagine that these, and unfortunately or fortunately for many of these applicability or compliance, I would say, the criteria are different. So it becomes extremely difficult for us to monitor that even in case of a private limited company, what is applicable, what is not applicable. Even like a review of loans given under 185s, whether a special resolution is required under 186 for investments, CSR, whether it is applicable, not applicable. So there are so many things which are applicable even to a private limited company. And therefore, this is the type of compliance checklist, I would say, that we prepare in our office. And I would encourage members also to please ensure that you have, and if anybody of you want me to share these files, these Excel files, these templates, I would be more than happy. You can message to me or mail to me, and I would be happy to share this. But this becomes very, very important. And let me tell you, friends, in our office, we have a practice that when this comes up for review, any financial statement, any balance sheet comes up for review, these are some of the files or workings which we mandate our team to put up before the partner, before the sign off happens. So, immediately you come to know that if Caro is applicable, last year Caro applicable nahi tha, nahi banaya tha, is bar Caro applicable ho gaya hai, let us say borrowing bada hai, ya capital plus reserve bad gaya hai, and Caro has become applicable, then, I have seen many of the companies, they miss out on that when there is a change from a non-Caro to a Caro. And therefore, my request to all my professional friends over here is that please ensure that you keep such workings, make it mandatory. And like I said, this lockdown time is the right time for all of us to see to it that we are able to put a proper documentation and put proper back office and systems into place. So I'm back on the presentations. I have discussed about the accounting standard checklist, the standards on audit checklist, the compliance of Companies Act, verifying provisions of the Income Tax Act, labor law compliance, internal. So these are the things that we are supposed to do during the course of our audit. So now coming to Schedule 3. Friends, you all must be aware that Schedule 3 has now been divided into 3 components, 3 divisions. Today we will have most of our discussion on Division 1, which is applicable to companies which are following the Companies Accounting Standard Rules 2006, which would basically mean the Ind AS accounting standards. Division 2 is for companies following accounting standards, and Division 3 is for NBFCs, which are to follow Ind AS now, henceforth, and they are have to follow the requirements under Division 3. So when we are talking of private limited and small unlisted companies, what we have to follow is Schedule 3 Division 1. We are all aware that the accounting standards would override the provisions of the schedule if there is any such conflict. And we have to maintain the same unit of measurement, including that in the auditor's report. So if in the financial statements it has been mentioned in rupees lakhs, then whatever we mention in our auditor's report under Caro or maybe under EOM or OM, there also what we have to do is we have to continue with the same amount in rupees lakhs. So that is what is the requirement of Schedule 3. Small and medium companies, we've already discussed the criteria by way of that Excel file, that where the turnover is does not exceed 50 crores, borrowings does not exceed 10 crores, and which is not a holding or company of a subsidiary of a non-SMC. So all these companies would be non-SMC. If it is below this threshold, then it would be SMC. But very important over here, and I've seen quite a few financials, like it was mentioned in my introduction that I am part of the Financial Report Review Board, review group, I would say, of Vadodara on many occasions. And one thing is there that that this, if you are following SMC, there is a note that is required to be given in the financial statements that the company is a small and medium-sized company as defined in these rules, and the company has complied with the accounting standards as applicable to SMC. So this has to form part of your notes to account. Very, very important, because I've seen many financial statements where the benefits or the exemptions given to SMC, they are being availed of, but this note is not there. So please ensure that is all the SMCs you have this note. When you start the audit, the initial document requirement, which I believe that you should take, even if there is it's the same client, you might have been doing that audit for 10 years, 15 years, but I feel it is very important that your audit team must have these initial documents before they start the audit. One is the organogram, the authorization matrix, and the contact person. There are possibilities that the accountant might have changed, the CFO might have changed, the person looking after finance accounts might have changed. Or maybe if we talk of the plant, the factories, the workshops or anything, there would be a change over there. So it is very important that you first take the list of the latest organogram. Also the update on the products, locations, operations, capex, whether new locations have come up, any new capex that have come up, any new borrowings are there. So all these things are important. Any addition, liquidation, change in the status of entities in the group. Let us say till last year it was a standalone entity, and this year there has been an investment in an associate or a partnership firm for that matter. Then you must be aware of it, because many times I have seen that there are these investments that are made for which share certificate is not there. It is lying in the investment, the asset side as a share application money, and the shares have not been allotted. We don't do a check of the other entity in which the investment has been done about the status, and then it becomes very difficult for us to certify the financials in the true and fair view. Master data from MCA website must be downloaded to find whether there is any change in the share capital, authorized capital, directorships, or any such thing. Computation of total income and ITR for the previous year, that should be there. Minutes of board and general meeting. Friends, this I feel is a big gap, especially in case of the private limited companies. Many times it is the professionals, we only, who do the compliance of that company for the company law matters. Friends, my request is that please don't take these things lightly. Insist, even if your office has to prepare, please ensure that before you start the audit, you take all the necessary board resolution, the extracts of board resolutions that the company might have given to bankers or some investment, some mutual fund, somewhere, anywhere, wherever. And you make the board meetings and the general meetings minutes before you start the audit. Then it becomes much easier, and you are also aware of whatever has transpired with that entity during the year. Statutory registers also you must take before the start of the meeting. And like I said, that if you are the consultant or professional who has to update it with respect to change in shareholding, debenture holders are there, there is a chain transfer that has happened, all those things need to be updated. And your audit team, whosoever, it might be the same person, but that as an auditor, when he or she goes, they must be having these latest things and updated statutory registers. MBP1, very important from a related party transaction perspective, because it gives, see, this is MBP1 is not a form which is you will find on the ROC website, because that is not to be filed with the ROC, but it is from the director that has to be given to the company. Again, I've seen in private limited company, we give this a miss, and there is a legal requirement. There are penal provisions also that at the beginning of the year, the MBP1 has to be filed by the director with the company. I would request you, please try to understand that if there are transactions that have happened with a firm or a company in which director is a director or director is interested, and we don't have the MBP1 on record, we would not know, or our audit team would not know that there are such transactions which have happened which require legal compliance. Right? And this would happen at the end of 2 years, 3 years, when some compliance come, or maybe the auditor of the other entity, if it is not us, ask for a balance confirmation or something, and at that time we are aware, we are get a transaction bhi hua hai which we were not aware. So MBP1 I feel is equally very important, and I tell you all these lists, I will honestly, I will practice, I will preach what I practice. And as our office, we take these things, we make it mandatory, even if it is required, it is required. And finally, the trial balance. And based, once you get the trial balance, like I said, that limit evaluation and all for the current year number you can plot. And a trial balance is also important for you to map the subsequent changes that are happening in the financial audit. Again, these are the forms. I would request everybody, please do. If we are talking of do and do not, this becomes a big do that you must have in your file before you start the audit. CLR1 with respect to the number of subsidiaries that an entity has, the registration, the charge registration, creation, modification, or any change with respect to charges. If there is a satisfaction of charge, that also form you should have before you start the audit. See, it should not happen that when you go for audit, you find कि अच्छा ये borrowing आपने लिया है, आप मेरे को charge का form दीजिए, या अच्छा ये borrowing आपका clear off हो गया, तो whether a satisfaction of charge has happened. I would suggest that to have a discipline within our team and at the client's place. These are the things which we must, because I'll tell you my practical experience also, that many times when we ask if there is some other consultant who is doing this company law work, they go to him. Bhai, aap ye form dijiye. He gives up the response after 4 or 5 days, whatever, let us say. By that time, we are on the verge of completion this audit, and we are all geared up to start another audit because we have all audits lined up one after the other. And this document comes at the last minute, and it honestly, as an individual, I feel pretty annoyed if these things are not in place right when I want it. The MSME returns, we all know the importance of reporting under MSME. So this is something which we must have half yearly. So the first half year of September end would have been filed. So that we should have. Maybe March ka baki hoga. But when we talk of private limited companies, most of the audits happen after May, June, and all those, when a lot of these annual compliances with ROC are also over. So we can safely presume and ask for the both half year returns for MSME. DPT3 return of deposits, again, like I said, that the due date would have gone, they would have filed the annual return. We are auditors, we would have been required to certify DPT3 also some of the transactions. So that would give us a comfort, but then this also we should take return of allotment, resolution. See, all these forms are something which I believe that as an auditor we must have on record before we start the audit. You can add to the list, feel free to, but these are the things which we must have before we start the audit. Friends, I will take through some of the balance sheet and PL items. I will not go through the whole schedule, but I will, based on my experience, my interaction with other professionals, where I feel that there might be a possibility of some slippage in the reporting or in the understanding, I would touch upon only those aspects under this presentation today. So when we talk of current and non-current classification, many times, I have got these queries that if there is a non-moving, slow-moving inventory or inventory that has not moved since a long period of time, whether we should classify that as a non-current. Friends, the guidance note on Schedule 3 is very, very clear that, items of inventory which may be consumed or realized within the company's normal operating cycle, it should be classified as current, even if it is not expected to be realized within 12 months after the reporting date. So inventories can never be a non-current item. It always has to be a current item. Any liability, why I have taken this point is because there we would find a lot of cases where there would be these loans that would get rescheduled March end because of the COVID-19 situation and the extensions or the liberal schemes of the government with respect to MSME and some other business entities also. So what would happen is that would change the classification of a current or a non-current. So depending on whatever is the reschedule, because now this is the scheme of the government, and if the client has opted for that scheme, so what the requirement is that if your client has an unconditional right to defer the settlement for at least 12 months after the balance sheet reporting date, then we have to classify it as a current. So if he does not have the right, now over here, like I'm saying that maybe the March 20 installments would get postponed to the Q1 or Q2 or whatever would be the terms. And so that would get classified as current, that is one. And if there are any installments or loans that are there for a period of 3 years or 4 years that have been there, in case, now most of these loans have been taken, have been taken in financial year 2021. But still, if there are any loans which we find that where the client has an unconditional right to defer, then it would get deferred beyond 12 or to defer beyond 12 months, then it would become non-current. But if the client does not have any unconditional right, then it would still be classified as a current. And as far as employee obligations are concerned, again, current non-current classification is very important. I'll tell you with respect to employee benefits, the bonus and all, I have no issues. Everybody classifies that as current. But when we talk of the leave liabilities and the liabilities with respect to gratuity and all, again, where we are taking the actuary report, we can insist to the actuary to give the current non-current classification which they give, and we can incorporate that in our financials. But where that is not happening, where we do still follow the 15 by 25 days method and we quantify and we give it, over there also we need to understand that what would be the current and non-current. Everything cannot be current, everything cannot be non-current. So based on the past trend, that working or that percentage has to be derived, and you should classify that into current and non-current with respect to the employee benefit obligations. Share capital here, for equity and preference shares, we should disclose. I've seen this being complied, but my concern is on the next point with respect to the shares of the company held by. Here, in a majority of the cases, I have seen that held by holding company and ultimate holding company is something which the auditors examine. Now, let us say you have an auditor of a company where there are 4 or 5 private limited companies which are there as the shareholders. Now it becomes, so one can be the holding company, let us say, which is holding more than 50%, 60%, whatever it might be, more than 50%, and the rest are holding the remaining. Now they are all companies within the same group. So this requirement is, if those other 4 companies other than the holding company are either subsidiaries of the holding company or associate of the holding company, it may not be the subsidiary or the cannot be subsidiary but associate of the client of yours but of the holding company, then that also needs to be disclosed about the shareholding pattern. So when I interact with other professionals, I feel this is somewhere that we check about the holding company 50% से ऊपर है तो उसका disclosure आप कर दीजिए because ये holding company है. But then we don't go beyond to find out whether then the other body corporates in that shareholding structure, whether they are again subsidiaries or associates of that holding company or associate of that ultimately holding company. And this also, like in Indian structures also I find, and it is more so to happen especially where there are foreign shareholders or foreign corporates, or these are subsidiaries or associates of foreign companies where they have a worldwide company structure and there is a very complex shareholding. So it's very important that we look into this matter. Share application money, I know most of the professionals are now aware about the nuances of this, and there is hardly any share application money which we find, but still it cannot be missed out. And now this time, especially when we talk of COVID-19 and that shortfall which might be there on the cash flow, the maybe the promoters or the directors, they are not able to bring in money and they have their friends or associates and they might get inclined to bring something as a share application money. So in that case, it becomes very important that we make the proper disclosures. That one is that it has to come on the face of the balance sheet between shareholders fund and non-current liabilities, because it is neither shareholders fund nor a non-current liability, therefore it would come somewhere in between these two. And what amount, see, this is something very important, that when we talk of a capital structure, we say authorized, issued, subscribed and paid up. These are the 4 terminologies which we normally use. Authorized is fine. We all know that whatever is there in the ROC, MCA approval, what is the authorized capital, we all know, we disclose that as a separate line item also in the finance balance sheet. When it comes to issued, subscribed and paid up, most of us, because that is what is the situation and we are correctly reporting, that we give on the same line that issued, subscribed and paid up, and these many shares previous year so and so, face value this and we give. Now we need to understand that if there are any such issues which are pending as on the cutoff date as on 31st March, so that means the board of directors has authorized the company to issue the capital. So the capital has been issued. If it has not yet been subscribed, if there is a rollover, then your issued capital item line would come separately and subscribed and paid up would come separately. So you would have authorized, issued, and you would have subscribed and paid up, right? If you have issued and subscribed and there is something pending paid up, so this one thing is what I want to draw attention, that we must try to find out if there is any difference and we have to do the reporting accordingly. So in case of share application money, the share application money which is not exceeding the issued capital and is not refunding. So whatever is the issued capital, my share application money is less than that, and I propose to allot shares to all such share application money, against all such share application money, and therefore they are not refundable, then they would be shown as share application money between shareholders fund and non-current liability. Now if my share capital, issued capital, is more than the authorized capital, so and I have applied to the ROC, it is still pending, then I have to show that additional amount the authorized capital minus issued, whatever is the excess in issued, that I have to show under other current liabilities. I cannot carry it as a share application money. So these are things which are very, very important about the share application money. And why I thought it important is, like I said, that people might be inclined to bring in money by way of share application money, and then refund the money. So there are restrictions on that also, that once my liquidity position improves, I will refund it. So the share application money, we have to allot the shares in 60 days. Else, though, the whole application money is required to be refunded within 15 days. So if you get a period of 75 days, now if you fail, so from the date of completion of 60 days, right? And then if you fail, there are two things. One is that you have to repay that money with interest at 12% from the expiry of 60th day. So, and after the 75 days period get over, this would come as a deposit. And you would be violating the provisions of section 73, and therefore you have to ensure that the share application money is taken care of within the time bound period of 60 days or the extended period of 75 days within the what is permitted. And any adjustment of the amount for any other purpose shall not be treated as a refund. So let us say that you have a customer who says that fine, I'll fund you for 2 months or 3 months or whatever, and then you refund me back as the money and all. So now you have taken the money. You actually don't intend to issue shares to him. You have taken money as share application money, and after 60 days or 75 days period, you find that you are unable to refund the money. So you can't say that now this money I will adjust with the amount that I was supposed to receive from him as under a trade receivable. That would not be treated as a refund, and you would be violating the provisions of the Companies Act. So please ensure that proper care is taken care of under share application money. In case of borrowings, again, there would be multiple borrowings, multiple securities. So some aspects, one is that we have to give loan-wise classification of security or loan-wise details of security. We can't say that all term loans from bank are secured by hypothecation of fixed assets, immovable property, so and so, so and so and so and so. We have to give the bank-wise or the loan-wise details of security in the disclosures. If one security is given for multiple loans, so let us say there is a cash credit as well as there is a term loan for which there is a single security which is attached to it. In that case, we can give club the two loans together and give that note, but I will have to do a cross-referencing that even against the term loan where the amount comes, we have to give reference of that security note, and even under the cash credit, then we have to give the same reference of that note, that for security kindly refer so and so note. So that cross-referencing has to be there. Another very important aspect is that many times we have seen in the small entities that the promoters or the directors, they pledge their personal assets for some borrowing which is done in the name of the company. So I have a few clients, where they have equity shares in their personal name which they pledge, and the loan against share is taken in the name of the company. So the Companies Act is very clear, and the Schedule 3 is also very clear, that such loans have to be classified as unsecured because there is no property, no asset of the company that has been pledged against the borrowing. Therefore, these loans would be classified as unsecured, and at the same time, even though classified as unsecured, the security of the directors or members or whosoever has given that security, that still has to be disclosed in the notes or by way of the under the particular note or the schedule, that you may say that security, that in spite it is unsecured, but it is secured by the personal guarantee of the directors or personal immovable property of the directors or whatever the case may be. But it would be classified as unsecured. Disclosure of repayment terms. Here I would like to just share one thing, and that is that in case of prepayments, we have a few clients, where once they have liquidity, especially in case of term loans, they pay a couple of installments in advance. Then what happens in such a case? Because the remaining installments that are due, you are not able to gauge because there is some lump sum prepayment or that has been done. So in such case, what we do is that in case of the repayment terms in the table, we give the terms as per the sanctioned terms. Why we take this, I'll give a logic that let us say that the client has given, let us say, 2 installments in advance. Now, we do not know what is going to happen in the future. Whether in future, whatever are the remaining installments he would pay, or maybe he would take a break of 2 installments whenever he feels fit, because ultimately, because he has prepaid, the amount would not get classified into NPA from the bank's perspective, and he might take that liberty that he might skip 1 installment. And therefore, as a practice, what we do is that whatever are the remaining installments as per the sanctioned terms, that is what we disclose in the financial statements. Though they might not be in reality the pending installments, but like I said, that we don't know the future, and therefore we disclose that these are as per the sanctioned term. We give that note also that for this loan and this loan, the details that have been given are as per the sanctioned term. So there is no need to match my outstanding borrowing amount with the repayment terms, but yes, the details have to be very, very clear. There might be defaults happening that they might not have given the stock statement, or there might be some other insurance with related requirement which there might have been a default. But these are the defaults which we are not supposed to disclose. We are supposed to disclose only the financial default aspect with respect to the loan and interest. Details of default existing as on the balance sheet date. So here also now under COVID-19 situation, we will have to take a call that what is this default, whether, under the government scheme, that default is no longer to be considered as default. Then I would suggest that rather than not reporting at all, we should give the note that that there is a default, but however, so we might say that there is a delay, not a default. There is a delay, but as per the government scheme of so and so, this is a permissible delay. I would suggest that we should give such a note rather than giving no note at all. Again, a default that is made good at the year end, it need not be disclosed. So like I'm saying, this is a default which is there at the end of the year, which is made good subsequent to the year. Because of the government scheme, it is not considered as default. Then a suitable disclosure is always better and advised. Friends, we come to deposits. Again, this is a gray area which I've seen in the audits of company audits. Again, I would say especially with the small and medium enterprises. So what we talk about exempted deposits, definitely intercorporate deposits are exempted deposits. Receipts of amount from director, relative of director out of own fund. Here also, friends, as a firm, we have a practice of taking the declaration from the director, because we might not be privy to the personal financial transactions of the director or the relative of director, and whether they are borrowing money and then in turn lending to the company, or what, we are not privy to that. And therefore, we insist on a declaration from the director or the relative that it is out of his own funds, it is not out of borrowed funds. So that we ensure, because ultimately, as an auditor under CARO, I am supposed to judge whether this is exempted deposit or not, and therefore we insist on such a declaration. From a planning purpose, again, like I said, that we might advise our clients that if they need funds, they might issue compulsorily convertible debentures which are convertible within 10 years, and they can be unsecured to fund their requirements if it is for a thing like what we normally say as a permanent working capital. So it would be a working capital that would be required of a long period of time, and therefore if they don't want to issue equity immediately, they don't want to dilute their stake, they may issue compulsory convertible debentures for a period of 10 years, and that can be issued which are unsecured. If you have a secured debentures, then whatever it is optionally convertible, compulsory or even non-convertible, then they are exempted deposits, they are not deposits. So this is another option that can be explored. In case of promoters, where banks give loan, they also many times put a condition that we give X amount, and Y amount is what the promoters have to bring in, or if they have already brought in, they cannot withdraw that amount. So if these are the conditions, this is a stipulation, this is a precondition with respect to any loan from any financial institution or a bank. Only from a lending financial institution or a bank, this should be a precondition. Then those amounts are not to be treated as a deposit, even if it might be from a the promoters who may not be directors but who are the shareholders. But this exemption, again, word of caution, will be available only till such loans are outstanding in the books. Once the loans have been cleared, they have been paid off, then these private loans also from members or promoters have to be cleared. Then you cannot continue that, because after that date of repayment of loan to the financial institution or bank, this would become a deposit. Business advances deposit, again, this I have seen as a gray area, and therefore I thought it fit to discuss over here, that if a client has received advance for supply of goods or services, then the supply has to be done within 365 days. If it is beyond 365 days, then it would be violating the deposit provision. Over here also, we take a view that if it is from a company, then it would classify as a loan from a company to another company, intercorporate deposit, and might not violate the provisions. But if the advance has been received from other than a company, a proprietor partnership from LLP, and that remains in advance for more than 365 days. So this is one element that needs to be audited, that whatever are the opening balance on your liability side, because these are advances which would get reflected as a liability, and the same amount reflects as a closing balance, then you have to see that whether this is an advance which is received for any supply of goods and whether there is a violation of the deposit provisions or not. If the advance is received against immovable property, then this has to be adjusted against such property in accordance with the rules. You can't take an advance saying that this is an advance against the property and then pay back that money after 1 year or 2 years, saying that you have we are refunding you the money and all those things. So the rules very clearly say that it has to be adjusted against such property only. Security deposit for performance of the contract, advance against long-term projects, these are all exempted deposits. But my request is that on the liabilities side, these are the things which we must ensure that we take care of. When we talk of deposit from members, we are all aware that from the Companies Act 2013 till today, there have been a lot of exemptions, or I would say relaxations, which have been given with respect to deposits from members, which are subject to compliances. So this table, it just gives a clear, I would say, a reference about what are the conditions and when can we take deposits from, or the companies can take deposits from members. If it is a startup company, then for 5 years without any limit, it can take up a deposit in case of private company. And if it is other than startup, then there are 3 conditions which need to be met. If those 3 conditions are met, then you can take any limit. Without any limit, you can take the deposit from members. And in case of other companies, means where those 3 conditions are not met, or I would say any of those 3 conditions are not met, then you can still take, but it would be 100% of the paid up capital, free reserves, and securities premium. So this becomes a challenge. We have a couple of clients where the net worth is 0 because of accumulated losses, and where those 3 conditions are not met, then they cannot take deposits from members, because 100% of paid up capital, free reserves, and securities premium would be 0 or in negative, and therefore they cannot take. Again, in case of public companies, if it is an international financial service center, then it can take 100% of that limits. Eligible company 10% and other companies 35%. So we will focus on the private companies 3 conditions. What are the 3 conditions? That company, the company which is borrowing money, is not an associate or subsidiary of any other company. The borrowing from banks or financial institution or any body corporate of that company should not be twice of the paid up capital or rupees 50 crore, whichever is less. So if you already have intercorporate deposits in case of such companies, then you have to see that whether that intercorporate deposit is more than twice the paid up capital or rupees 50 crores, whichever is less. If it is more than that, that means you are violating this condition and you cannot take any deposit from members. And third is the company has not defaulted in the repayment of such borrowings, which is subsisting at the time of accepting deposits under Section 7. So there should be no default. So if all these 3 conditions are met, then only the company, the private limited company, can take deposits from its member without any cap. But if any one condition is violated, it cannot take. It would go into 100% of the paid up capital, free reserves, and the securities premium amount. Yes, this is another area where my experience says that we make a lot of unintentional errors, especially when our team goes for audit, is identifying the difference between a provision and a liability. I've taken this right from the standard AS29. It's a definition where it clearly mentions that a provision is a liability. So provision also is a liability, but it means for measurement, there is a substantial degree of estimation that is required. Whereas a liability is a present obligation. And I would say that when you compare the most important comparison, I would not go into the details of the definition, but the substantial degree of estimation. So provisions can be distinguished from other liabilities such as trade payables and accruals because in measurement of provisions, substantial degree of estimation is involved. Now I've seen so many financial statements that whatever is outstanding for which let us say invoice is not received at the end of the year, we put it as a provision. In my opinion, and even as per the standard, this is technically incorrect. See, because for a provision, we need to give the movement, right? The carrying amount at the beginning, additional provisions made, what are the amount that is utilized, what is the amount that is reversed, unutilized and now no longer required, we reverse it, and what is the closing balance. So this whole movement we need to show. So the moment we put anything under provision, we have to comply with this movement requirement. Now we put so many things. So this I have just for clarity, a provision versus a liability. Now the provision for audit fees, I've seen so many cases it is put as a provision. Now what is the, I would say substantial degree of estimation required in determining an audit fees? Is it required? No. See, you discuss, you decide 5-10% either udhar negotiate last mein hota hai, that is a different thing. So it is a current liability. Provision for expenses, we have electricity, we have telephone, we have office expenses, so many things which are there. So we put that as a provision. That is not a provision. You might use the word provision, but it is a current liability and not a provision. A warranty provision is definitely a provision because for a warranty that you have a 1-year warranty, you have a 2-year warranty, you work out on the past trends that how much is the warranty cost. मतलब replacement मेरा कितना हुआ, returns कितना हुआ, मैंने कितना खर्चा किया है उस पे, and there is a estimation which is there on the past trends and you work out इसमें से कितना हो गया है, and there's a lot of working that is there. So it fits under the substantial degree of estimation required, and therefore it is a provision. Is provision for warranty is a provision. And in that case also you will see for so many companies, you pick up any requirement, any I would say 2-wheeler, 4-wheeler company, any such company where a warranty provision is there, and you will find that they even disclose the movement, the opening balance, addition, utilization, reversal, and the closing balance, because that is a provision under AS29. Provision for bonus, again not a provision, it is a current liability. Leave, gratuity, yes, again like I said, that there is a substantial degree of estimation that how much would be there. A gratuity based on the actual valuation, they do the escalation to the date of retirement and then they bring it down to the present value. So there are estimations with respect to the percentage of salary increase every year. There are estimations with respect to discount rates, and all these are there. So there is a substantial degree of estimation which is required, and therefore for leave and gratuity it is a provision. And if you look that, I would say under AS15, in AS19, AS15, that we do give those disclosures with respect to the provision movement and that with respect to the leave and gratuity, because there is a specific standard which is covered under that. But when we talk of classification, we classify it as a provision. Doubtful debts, again, it is, you can say it is, you are estimating and you net it off against your trade receivables. Income tax, again, I believe there is no such thing. The tax laws are already there. Whatever deductions you have to claim, you are claiming. Whatever deduction you cannot claim, you don't claim. And therefore, there is hardly any substantial degree of estimation required. And therefore, income tax provision also is a current liability if your provision is more than your advance tax or TDS. And if it is not, then you show it as a current asset, as a refund receivable. So this is with respect to provision versus liability. So my request to all friends over here is that please ensure, tell your team that I would look at it from a different perspective, that what comes under provision, please spend 5 minutes extra when you review that ye kya hai. See, so anything which is not a provision would go into a liability. So the moment you go under that audit of review of the exceptional principle, you see whatever is there under provision, if it classifies under provision, then everything is correct. Coming to fixed assets, again, on the disclosure front, fixed assets has been changed. Name of the standard itself has been changed to property, plant, equipment. So please, आपके जो templates है, balance sheets है, उसमें fixed assets हटा के please put it as a property, plant and equipment. Another requirement is, see now what has happened is that this standard from AS10, what it was, now it is still AS10, but most of the Ind AS paragraphs, Ind AS 16 के जो है, that has been put into AS10. So there is one requirement. The first one is the reconciliation of the gross and net carrying amount. Now here I would like to stress, for each class of assets at the beginning and end of the reporting period, showing additions, disposals and equipment. So it says that the gross and net carrying amounts for each class of assets. At the now, I see earlier what we used to have a schedule fixed assets का. We used to have plant and machinery पूरा दे देते थे और corresponding previous year का एक amount दे देते net block का. Then we used to have office equipment, then we used to have that as a computer and all, then we used to have vehicles, सबका opening, addition, deletion, closing. वैसे ही depreciation का opening, addition, deletion during the year, reduction and closing on net block. On net block में comparative दे देते थे. Now the requirement is that this gross and carrying amounts of for each class of assets showing additions, disposals, acquisitions has to be done. So what is required, that you have a plant and machinery ka line, you give everything for, let us say, March 20, opening, addition, deletion, closing, similarly for depreciation. And then you also have to give for March 19 all those details. So opening, addition, deletion, closing for March 19. Then you have, let us say, we said that office equipment. So office equipment की सब details आपको देनी है 2 साल की, comparatives as well as for the current year, which I find missing in most of the financials, and therefore this is something which we must do. AS6 depreciation accounting has been withdrawn. Standard ही पूरा हटा दिया है और depreciation के जो provisions है वो AS10 में आ गए हैं अभी. So here is that you in the note schedule सब बराबर है, no challenge in that, but in your significant accounting policies, I have seen again many financials which draw reference to AS6, which is technically incorrect because as on today AS6 है ही नहीं. So even on the depreciation, you have to give reference to AS10 only. So kindly correct if this is there in the balance sheets or financial statements that you are certifying. Component accounting, I think ये तो schedule 2 जब आया था तब से ही everybody was aware, but especially in case of manufacturing companies, in large companies, component accounting becomes very critical, because if we don't do proper component accounting, then it has the impact of fluctuating the profitability, because something which you would be allowed to depreciate over a period of time, you would not depreciate it and you would take it as a repairs and maintenance hit in 1 year. And therefore for that year, your profits would come down, and then in the subsequent year, it would again go up. So please ensure that component accounting, so that is required if one, that amount is material within the asset. So I'll just give an example that let us say a vehicle. It would not fit in the definition, but just for the easy understanding of members, you have a vehicle where you have a steering wheel, you have seats, you have engine, and you have tires. Now let us say tire, my vehicle, I would say that I would run it for 5 years, whereas my tires would, because मैं बहुत चलाऊंगा तो 2 साल में शायद वो फट जाएंगे. So the tires I might need to replace in 2 years time. So what the standard says, that the value of tires, that you take it as a separate component, you depreciate tires over 2 years and the rest of the vehicle over 5 years. After 2 years, when you replace the tire, so that value would become 0, and or whatever is the value, you de-recognize that, and the new tire you purchase, you capitalize that and again depreciate. So by this, what happens is that you would have the impact of having a smooth P&L and not a fluctuating P&L with respect to repairs and maintenance and depreciation. But this would be more in case of large companies, and in case of, I would say, high capital intensive assets, entities. On the asset side, again, I would say these are the challenges that we face in the small companies. के liquidity है तो director को पैसा दे दिया, you know, and then सब हो जाने के बाद they come to us कि अभी ऐसा हो गया, अभी आप बोलिए क्या करें. So you know, that is the challenge that we face in auditing the small and medium enterprises. So section 185, you know, that no company shall give loan to any director director of the holding company, partner of any such director, relative, firm in which director. So these are complete bans, strict prohibition. Loan, guarantee or security. ये जो 1, 2, 3, 4, 5, 6 categories है in the screen, in these case there is a strict prohibition which is not permitted. But if a special resolution is passed by the company in general meeting and the loans are utilized by the borrowing company for its principal business activities, then the company can advance any loan or give guarantee or provide a security for a loan taken by any private company of which any such director is a director or a member. So let us say the director of our client is also a director in another company, and from this company, from our client, they have advanced money to the other company where the director is common. So in that case, if a special resolution is passed and the other company, the borrowing company, has used that money only for business purposes, then it would still be eligible and it would comply with the requirements of section 185. You also have any body corporate at a general meeting where not. So these are the three categories where if a special resolution is passed and loans are utilized by the borrowing company for its principal business activities, then you can continue giving the loan without violating the provisions of section 185. Coming to the profit and loss side, unbilled revenue versus WIP, because this also I face a lot of questions within my office as well as from other professionals. Friends, this would be applicable where normally not for trading or manufacturing, but where you are following the percentage of completion method, or you are billing, let us say in case of a IT company, a software company, or any company, let us say I'm saying like a electricity generation. So electricity generation, now let us say the billing is done on a monthly basis, which might not be 31st March. There would be different billing cycles. So, they have already supplied electricity to us, whereas the billing happens in, let us say, 5th April, 10th April as per the billing cycle, but 31st March tak to ho gaya. Similarly, there are many IT, information technology companies, BPOs, where they are continuously working for their client, but the billing cycle is bi-monthly, quarterly, and anything which might not coincide with my 31st March. So what to do? See, the whole funda between unbilled revenue versus a work in process or recognizing this is a matching concept. That costs have been incurred. मेरा salary का cost गया in case of a BPO company. मेरा let us say bandwidth है, मेरा वो सब जो भी cost है, वो सब cost गया. उसके सामने मेरा there is no matching concept inventory or unbilled revenue. So to that extent my profits are understated because my expenses are more, my profits are understated. So this is what is the concept. Even unbilled revenue, I know GST के जो annual return है, उसमें भी you have the adjustment for unbilled revenue that is required because the actual billing would happen in the subsequent year, and this is just for the financial year-end purposes that you do the unbilled revenue. So unbilled revenue is when the customer simultaneously receives and consumes the benefits provided by the entity's performer as it performs. So like I said, electricity आपने sell कर दिया है, उसने consume कर लिया तो उसको benefit मिल गया है. If I am talking of a BPO operations over there also, whatever is my staff in the BPO center, they have done the work, जो भी queries थी सामने वाले client के customers के everything. So that has been consumed. Therefore I would say that it would be considered as a unbilled revenue. If the entity's performance creates or enhances an asset that the customer controls, the entity's performance does not create an asset with an alternative use to the entity. Matlab, see, I have delivered some service, I have delivered some goods. See, this also applies to construction contracts. Let us say मैं road बना रहा हूँ. Now I have made that road for the main contractor. Now what happens? I have a percentage of completion 31st March तक मैंने costs incur कर दिए हैं. Now whether that road that I have created, for me, whether it has any alternative use and whether I have an enforceable right के जितना complete हुआ है, I can tell that main contractor or my customer कि भाई इतना पैसा आप, in case of litigation, I have an enforceable right where I can insist कि भाई आप मेरे को इतना पैसा दे दीजिए. See, if all these conditions are fulfilled, see, these are the 4 cases. If any of them is fulfilled, I would say not all, but any of them is fulfilled, then you can recognize that as unbilled revenue. The reason being that unbilled revenue would be with profit. तो आपका जो भी परसेंटेज कंप्लीशन मेथड है या आपका जो भी मार्कअप है, आप उस पे ऐड करके यू कैन रिकॉग्नाइज अनबिल्ड रेवेन्यू, एंड एट द सेम टाइम दैट रिसीवेबल would not be shown as a trade receivable because we are not yet invoiced. in your balance sheet, that unbilled revenue receivable would be shown as other current assets, right? And and against that there would be a revenue which would get recognized. When you talk of a, now if let us say if none of these conditions are fulfilled, then that means that you have to recognize a work in process for that construction contract or whatever it is, that it has not satisfied any of these conditions, and it would be at cost. So no profit, no loss would be recognized in such cases, and you would be showing it as an inventory, as a work in process. So this is again very important when from a profit and loss, from a profitability perspective, that unbilled revenue is with profit and WIP is at cost or NRV, because it would be classified as an inventory, and it would be at cost or NRV, whichever is low. Incoterms, again, this is a big challenge. Cutoff procedures, very, very important. And especially for even otherwise, even non-COVID situation, this was a challenge. But definitely under COVID situation, this would definitely be a challenge. Because let us say, because we all are aware that from 22nd of March and 25th March, the flights were stopped and the ships were not moving and all those things, right? So what would happen is that your client would have sold goods, factory से निकल गया है, maybe customs clearance भी हो गया है, but अभी FOB है तो it has not boarded the ship. Now in that case, if it is FOB terms also, because you don't have the ship receipt note from the ship captain, you cannot recognize revenue, and you have to reverse that revenue. You have to take it at cost as a inventory, as a goods in transit, finished goods in transit. So these are the various Incoterms, and if you see by way of this chart, if you can see the cross between the orange and the blue, and in some cases only at the orange, that is where the risks get transferred from the seller to the buyer. Now we all know that AS 9 as well as in AS 115, we talk of the transfer of significant risks and rewards. Now these are the places as per the Incoterms where the risk gets transferred, and these are the different terminologies. So you have X works, you have free carrier, free alongside ship, free on board, all those things are there. So you can imagine, and you have to do the cutoff procedures properly to ensure that you recognize revenue as per the Incoterms in the contract. So some of them are even applicable for domestic transactions, but more so in case of international transactions. And like I said, especially in COVID-19 situation, this would be a very, very important aspect which we need to see. That if even for FOB, it might be at the port but not on ship, I would not be able to technically recognize the revenue, and I have to show it as a finished goods in transit. Some other important matters. One is reclassification of exchange loss. Here also I have seen many missing out. See what this is, it is as per para 4E of AS 16. That let us say you have a foreign currency borrowing which is at 4%, right? And your normal borrowing, if that borrowing you would have done in India, you would have got it at 10%. So you are getting a benefit of 6% as far as your interest cost is concerned. Now what this paragraph says is that against that saving, you would have maybe an exchange loss. Now that exchange loss we recognize as a foreign currency difference P&L, whatever is the expense or income net, whatever we show in the P&L. And interest cost goes as interest cost, both are separate. So what this paragraph says that to the extent of the difference of 6%, between 4% your actual foreign currency borrowing and 10% your notional Indian borrowing, that 6, to the extent of that 6%, that exchange loss has to be classified as your interest cost, your borrowing cost. So there would be a reclassification happening from within your exchange loss to your finance cost. So this is something which we have to take care, because once you reclassify, and if that borrowing has been utilized for the purpose of any capex, then you have to capitalize that interest amount, because now it forms part of your finance cost. Restatement of advances in foreign currency. Friends, our client has given advances for purchase. We are all aware that when we import, we work on advance. We have to pay money in advance, and there are these advances which are lying. Now, as per the AS 11, we have monetary items, we have the non-monetary items. Monetary items are those against which you would settle it for cash or cash equivalent, right? So cash and bank balance, we have trade receivables, because against that we would be getting money. We have trade payables, we would be paying money. So all these would be settled in cash, and we do the restatement. When it is advance against goods or advance against fixed assets, against that we are not going to receive any money. We are going to receive those goods, or we are going to receive those capital assets. So please do not restate those closing values in foreign currencies. ऐसा नहीं है कि भी जो भी है सबको restate करना है. You will have to examine that whether it is a monetary item or a non-monetary item, and only monetary items are supposed to be restated. Third is on the security of legal and professional expenses, very important with respect to audit of the contingent liabilities. We have this practice that we do a thorough scrutiny of the legal professional expense, because you have given 5,000 to some consultant, you means the client has given 5,000 to some consultant to represent some matter of labor law or some matter with respect to somebody has sent a legal notice or something. And you are all aware that most of these advocates, unlike chartered accountants, they work on advance. तो उसको पैसा पहले जाता है, साथ में काम चालू होता है. हमारे जैसा नहीं होता है. So it becomes very easy to identify कि इसको पैसा गया है. That means there is some matter which is there, which might be under litigation for contingent liability purposes, and therefore I would suggest in an audit, please ensure you do a thorough scrutiny of legal and professional expenses. Balance of borrowings vis-a-vis finance cost. Again, this is a trend analysis that you can just do. Tally है, SAP है, जो भी है उसमें से export करके Excel में you can just find a monthly what are the average outstanding with respect to your borrowing, और उसके सामने finance cost है. Apply a percentage, that what is the percentage of that interest cost vis-a-vis that borrowing, and just try to get that trend. Because I will tell you why I have put this is many times I have seen that there are personal loans of directors which are taken, and because it's a common lender, that processing fees or whatever of that personal loan also gets debited in the company, right? And we have, as auditors, we have to report if any personal expenses of directors are debited in the company or not. It also becomes a related party transactions, and there are a lot of implications on that. So please ensure that you do such a trend analysis, and that might help you in finding out any out of the box sort of an amount. Payments are bill by bill or lump sum on account, very important to I would not say that 100% foolproof, but to identify frauds. I have seen a majority of the cases that payments are received as well as payments are done on a bill to bill basis, invoice to invoice. But kindly tell your team that those accounts where there are lump sum payments which are being made, please ensure to scrutinize that. And in those cases, please ensure that you take balance confirmations from that as an external confirmation from that creditor, I would say. See, creditor, why I'm saying is that when a person issues a check, we have seen so many frauds happening where that amount actually goes to somebody else or the personal account of the employee, and it is shown payable to this, which might not be matching on a bill on bill basis. Similarly, we have in case of receivables also that is possible, that we say normally is a teaming and lading. There you know that money is received from one debtor, and that amount somehow, if it is not by an account pay check or RTGS, the cashier or whosoever wants to do the fraud, he takes it to his account, and subsequent money comes, he puts it into this account because he does not want to show a long outstanding, and this is what we call as teaming and lading. And so it becomes very important that you do a detailed audit of where on account or lump sum payments are received or paid. External confirmations and subsequent collections, very important, especially in case of COVID-19, that we confirm all the balances, we ensure that these are receivables and payables, and as on date these are confirmed by the especially the trade receivables of the clients. Credit amount in debit ledgers and vice versa. So this is also a very important control point from a two perspective, maybe from a fraud perspective and maybe from a rectification of entries perspective, that what went wrong, that a credit ledger, let us say a sales ledger has a debit amount, or vis-a-vis an expense ledger has a credit amount in the column. So this should definitely invite scrutiny from each one of us. ICDS impact and adjustments, when these also you need to do it at the time of finalization, because your provision for tax would depend on this, your even deferred tax, because I would say ICDS 1 with respect to mark to market, with respect to 2 on inventories, with respect to investments, if you have future options, like I said, mark to market, there are so many provision. Borrowing cost is something where I would believe that in 90% of the cases it would get impacted ICDS, but in 90% of the cases at the same time as auditors we don't report that impact. In fact, I have made that presentation on ICDS adjustments what are there at many forums, and if the conveners and the members wish, we can have a presentation here also. But here when I'm talking, those adjustments have to be very clear. that what impact it would have, and provision for tax would also have to be made accordingly. And because these are timing differences under ICTS, it would also have an impact on the deferred tax. Cash flow statement, friends, this is one thing which I have seen is the most neglected area. How much time? Is the very neglected area, and I say that in our offices somehow वो clients कुछ भी match करके दे देते हैं. Let us be very candid. People can correct me, they can message me if I'm wrong, but I am aware that these are the things. And so here also, friends, what we have, I'll show you one. Just a second. Yeah. I'll share an Excel file. In case it is not seen, please tell me. So this is a cash flow statement, and this is what we follow in our office. This is for March 20, March 19. Now all these figures you can see over here, we have remarks, link with statement of P&L. So these are all linked files. So it gives very clear indication. Chances of errors are minimized, especially in the cash flow statement. Adjustments for depreciation, so it has to be a positive figure, link with statement of PL, link with notes to financial statement, link only those interests which are not. So here all we have given indications about what are the amounts which should come directly from the financial statements to ensure that my cash flow gives a true and fair view. Because we do in our audit report mention that the cash flow statement also giving true and fair view, but we need to spend some time, or we need to have such process inculcated by which everything is linked. Here you can see on the right side in column F that most of the things we have said that these are linked to the notes to the financial statements. So the chances of errors are minimized. There is hardly manual working. Over here also, if you see that we have the working notes, these are the cash flow specific working notes. Unrealized forex, so this is with respect to unrealized foreign exchange gain. Inventories, what are the adjustments, what is the net amount of inventory movement, because you know we do a year on year with respect to inventories, trade receivables, those movements are there. So those trade receivables also we can't capture directly, we have to capture the movement. So but here also, if you see, these would all get linked to the financial statements, and wherever manual figures are there, it would get input for loans and advance, because we know that tax amount, tax, TDS, whatever is paid, that has to be disclosed separately in the cash flow statement. So that comes out of it. Capital advances. So all these are so why these are different line items is because in the financial statements where this would get linked to, these would be separate line items in different notes, different schedules. So this would get captured from there, and whatever is the movement, it would get captured over here. So from these are all the workings with respect to the cash flow statement that we have in our office. And then this gets captured over here. So if you see, all these give a reference from that this is refer working one. So this has to get linked to those workings in the next sheet that we have to ensure that the cash flow also gives a true and fair view. Friends, I have seen in a majority of the cases earlier, what was happening is that our clients, though there were chartered accountants over there, they used to come and tell us कि भाई cash flow हमसे नहीं हो रहा, आप please help करिए, आप please assist करिए. And I tell you honestly, for cash flow also we used to charge separately in such cases, but then we developed this whole tool. We send this to the client. We tell the client that आप इस पे बना लो, अभी उसके बाद जो inputs चाहिए आप हमारे पास आओ. So we save a lot of time and efforts of our team, and the client was also able to realize कि उसका mistake कहाँ पे हो रहा है, कहाँ difference आ रहा है, और cash flow क्यों tally नहीं हो रहा है. So जैसे यहाँ पे लिखा है finally cash and cash equivalent restated, because in case there is any forex adjustment, so all these comes, if you see, the link is to a workings and difference must be zero. So this is how we put on the cash flow. And my request to all members is, because cash flow is something you can't go and teach people, you have to develop a process by which you can minimize the errors, omissions, and you can maximize the qualitative aspect. Continuing with another thing is with respect to a tax reconciliation, friends. we call it ETR format, which is the effective tax rate format. I've shared that file. So here we have is the normal computation of total income, which is there for our client, that where you do the profit loss before tax, then you have the depreciation adjustments, then you have, this is in case of a decommissioning, there was a liability in this client. So this adjustment was there. Then expense disallowed as TDS, which are not allowed. So disallowed in current year, not paid. So it would get next year paid provision for bad debt. So these are all the computation adjustments which are there, and these are the computation. So here also you can see the note is mentioned, link this amount with P&L provision for tax. So right, so this should match with my provision for tax in the profit and loss. उसके नीचे आता है पूरा MAT का calculation. MAT working as per the provisions of section 115G. So this is the MAT working over here. Now we come to this side, that deferred tax. Deferred tax का closing means 31st March 2020. जो भी team ने identify किया है, they would plot. Or I would say जो भी client ने identify किया, they would plot what are the elements of deferred tax as at the closing. That would get plotted over here. And similarly opening, जो मेरा last year का था 31st March 19 का जो deferred tax था, उसका plotting यहाँ पे होता है पूरा. Now there is a difference between my opening and closing of the elements. So what is this difference? This is by way of formula, opening or closing. और ये जो है, then I find out कि ये जो difference है मेरा, whether that difference matches with the adjustment that I am doing to the computation. See, because ultimately timing difference जो है आपका computation से capture होके आएगा कि मेरा कुछ भी adjustment computation में हो रहा है तो उसमें I would create a deferred tax or reverse the deferred tax. So something which I had claimed as a disallowance earlier, if I claim as an allowance this year, तो वो मेरा deferred tax का reversal होना चाहिए. So in that way, if you see, जैसे ये amortization of land है, ये मेरे को benefit नहीं मिलता है as per that client. Right, so ये मेरा permanent difference में चला गया. So this difference column is a permanent difference under the deferred tax calculation. So that way we plot each and every element we map. जैसा ये बोला कि भाई 40A1A का ये disallowance है, so on that I would create a deferred tax asset, क्योंकि ये मेरे को बाद में next year में deduction मिलेगा, तो उस पे deferred tax create हो गया, and there is no permanent difference on this count. So similarly, this whole thing, and this is what at a review level, when it comes to me, I check this sheet, I check the last column, and I check the overall reconciliation, which I'll show you. So now these are the elements. ये मेरा total deferred tax हुआ. Deferred tax component, not the deferred tax per se, but deferred tax component. This is the deferred tax component. This is the difference, and this is my permanent difference. The total. Now I will apply the tax rate, and then if you see, this is the tax rate which is there. B56, तो वो भी यहाँ पे दिया है कि what is the tax rate that applies and what is the concessional tax rate. मतलब कोई capital gains का element है, ऐसा कुछ है जिसमें special rate है, तो वो भी क्या होता है यहाँ पे अलग से capture हो जाता है. Now ये rate आया मेरा, this is the tax liability on this. Now this is my normal tax rate 33.99%, but here I have taken that next year मेरा 34.61 पे ये reversal होगा. That is the tax rate which I am considering for next year because of the surcharge or whatever of that client. So now there is a difference because मेरा opening जो recognize था 33.99 पे था, मेरा closing जो है 30.9, 34.61. So there is a difference because of that also. Now when we go over here, this is the कि ये मेरा profit before tax है. See, because ultimately जो tax amount है, current tax plus deferred tax या जो भी components है, that would always get linked or a percentage of my profit before tax. So I take profit before tax. Now मेरा tax जो है, मेरा normal tax rate इस पे apply जब मैं करता हूँ 33.99%, तो मेरा 15 लाख का tax expense आ रहा है, जबकि मेरा provision for tax है 6,79,000 as per over here, which is the MAT rate. If you see this company is under MAT, तो ये MAT rate आता है तो 6,79,000 है. I have a deferred tax of 8,37,000. This also, friends, I will show you 837 जो आया मेरा. That is coming from this amount. मेरा final liability जो year on year movement है, opening और closing के बीच में 837 का मेरा difference है. So this is the amount which will come to on the face of my P&L as a deferred tax expense for the year. ये मेरा MAT credit entitlement है, जो मेरा normal tax और MAT tax का difference है, और permanent difference जो है मेरा 18,74,000, which is the total of this column, right? So this comes over here. So now if I look at this, मेरा summation जो है, जो मेरा tax आना चाहिए और बाकी सब components लेके मेरा difference 0 है. That means I have treated See, there can be an internal error between a current tax and a deferred tax, but as far as the overall financial statements is concerned and my tax expense is concerned, this difference is not there. And by preparing such control sheet, what we do is that at the review level, मतलब अभी तो ऐसा हो गया सर कि clients के level पे ही ये zero और सब कुछ examine होके आता है. We have to spend the minimum of time into this working. So that is what we do as far as the tax reconciliation is concerned. So after the audit, so that these were some of the important. I would say I was only on the do's. The don'ts सब लोग समझ गए होंगे इसके basis पे. After the audit, obtain management representation letter, and that is my first thing. That even before you generate UDIN, please ensure MRL आपकी file में है. You must have that management representation letter. UDIN, please generate on the same day. Our office, we have again told of all our clients कि भाई आप sign जब भी करवाते हो, please ensure that what date you put on the financial statements for signing, that is the date we want our UDIN to get generated. So please inform us on phone कि भाई आज के दिन में sign हो रहा है. You might send me for signing tomorrow or day after, but I want my UDIN to be generated today. And friends, let me tell you, some of you might be smirking at me, but unless we inculcate this discipline, this practice, nobody is going to believe us. And I tell you with conviction that we have done that for last year, and we were successful to the extent of 90% of our clients. Scan all important documents, keep it in the folder. We are in a very tight situation, work from home, relaxation bhi agar khul jata hai. I tell so many of my friends that even if you go to office, please ensure that you do all that is necessary for a work from home. Keep your plan B ready, because tomorrow we don't know, somebody in our residential society or somebody in our office building, somebody or a group of people might become corona positive, and that whole building becomes a containment area, and we might not be able to go. So I would still request members कि आपके office infrastructure जो है, once you go to office, don't celebrate that घर से निकल गए, lockdown खुल गया है. Please ensure that you utilize the next 10-15 days to set up your I would say disaster management or disaster recovery sort of a thing, that people are able to work from home. Keep original financial statements in permanent file, very, very important. In fact, we have a filing mechanism where each client is given a code. Let us say that Chintan Bhai Shah is our client, then his code is 001. And uske baad 000 are the next 3 digits, which is Chintan Bhai Shah's permanent file. So all 000 numbered file with a client prefix are permanent files. That is what we follow. Very important, raise invoice immediately, friends. Don't wait for Diwali, don't wait for Christmas, don't wait for 31st March. Raise invoice and collect fees. After the audit, very, very important. Now, friends, I would cover some aspects of COVID-19. I received some questions from members yesterday. Rather than a presentation, I would practically discuss about those. They were with respect to inventory, they were with respect to going concern. Friends, with respect to inventory, I would say that, we need to see that what are the alternative procedures, or first of all, inventory at the time of 31st March, in my opinion, is not necessary. You need to be present whenever physical inventory is being counted. It might be in June of 19, it might have been in December or of 19, it might have been in February of 20. So what you need to establish is what we need to report under CARO, whether the process and systems are in place for inventory verification. Yes. Second is that what are the discrepancies, whether there are any material discrepancies over there at that point in time of counting, and then what are the suitable actions that have been taken by the client in such a situation. Now see, what can be the alternative procedures? There can be a roll forward. Like I said, that Feb में counting किया है या December end में किया है, तो आप उसको roll forward करके वो जो भी discrepancies है, you can roll forward up to 31st of March and you can come to that. Second is a roll back. That let us say today somebody takes a physical count, and then you roll back the things, you make all the reconciliations, and you find out that as per your physical count, what was that inventory as on 31st of March. Against that, what is the book inventory, find out whether there are any material adjustments required or not, and you can make the necessary adjustments if they are required. Otherwise, based on materiality, like we said, that you can ignore it. So you have the rollback, you have the roll forward procedures. You also have the procedures where there are perpetual inventory verification systems in case of clients, where they have appointed a third party a consultant or a professional where they do on a monthly basis or on a daily basis, the physical verification that is done, you might have inventories lying with third parties. So there also you can get an external confirmation from the person or the factory who is storing that inventory. So what I'm trying to say, friends, is that there can be a number of possibilities by which you can get a confirmation, or I would say a satisfaction, that whatever inventory you are certifying is true and fair in terms of the quantitative terms. There is another aspect with respect to inventory where we will do a cost or NRV, whichever is lower. And I tell you, I had received once a call from a client where, you know, he was making this shirts for US customers. There was a customer in US, and they say that in European countries, in American countries, they sell these clothes based on the season. So the demand is seasonal. Now he had shipped, he had prepared that, he had put it, like I said, then all this material of his is lying at the port. It has not been shipped. Now we don't know, even if it is shipped, वहाँ पे season खत्म हो गया है, उसका क्या है, क्या नहीं, we don't know. So what happens is that there can be a challenge with respect to cost or NRV, that whether, you know, those shirts are sellable in India. If yes, at what price, whether it would be more than the cost price or it would be less than the cost price. Are there any damages that are required to be paid? So there can be all these situations that might be coming up which need to be examined on a case-to-case basis and discussed with the client with respect to cost or NRV, whichever is lower. Now I tell you, this was one published result where I found with respect to inventory, where the auditor of Piramal Enterprises Limited had drawn attention in the audit report other matters, and where they have said that we have performed alternative procedures to audit the existence of inventory as per the guidance of the standards, which includes inspection of supporting documentation relating to purchases, production, sales, results of cyclical count performed by management throughout the year. So that is what I'm saying. The management, if they do a cyclical count throughout or at regular intervals, then you can do a plus minus and do a roll forward or a rollback procedures. In fact, I am even told that there are a few auditors who are doing, even as on today, it is not possible. They are using technology. They are asking the clients to conduct some of the physical verification and keeping the video on. And, you know, so they are, the video is getting recorded, or it is a live screening that is a live streaming that is happening of the physical verification count, and the processor are being examined. The verification is being conducted by use of technology. Those evidences are being kept as a documentation in the audit files, that these are the videos for physical verification, and based on that, the auditors are coming to the conclusion whether they are able to satisfy the requirements of the standard on audit or not. And like I said, that you may, I have seen many companies, but this is of there are very few companies where such a reporting has been done. So I thought that I can share it with the members over here. Second was with respect to going concern. The questions were there. Again, friends, going concern is something which I, as an auditor, would look is a very far-fetched scenario. Even if I look at the standard on audit SA 570, which talks about going concern. In fact, for inventory and going concern, even our institute has come out with the guidance and literature that under COVID-19, what you should do, what are the questions you should ask, and based on the answers, what call or decision you can take. Going concern also, see, like there are so many factors which we would say, and the standard very clearly says that it is not just one factor that you might feel that, you know, that the going concern would get affected. It would be a combination of various factors, be it financial, be it operating, or be it other factors. So now when we talk, let us say that I'm just taking some hypothetical situations that when we talk of going concern, now see, first thing is that the lockdown got announced in the last week of March. So if I look at March 20 numbers, there were almost, I would say, 11 and a half months, or maybe 3 weeks plus 11 months that the company has performed, has worked. So for the last 7 days, 8 days, there might be, yes, might not be revenue, but there would be a fixed cost expense with respect to salaries, depreciation, and all those things, which might impact. But my question first would be that, you know, whether the performance of the company was such that the profits, or I understand there was a recession even before COVID, but that 11 and a half months of performance was not able to protect it from that last 1 week of non-performance or the lockdown. So that is the first question that would come to my mind. If that is the situation, then the going concern was always there. It might not be just because of the lockdown for March 20. Now coming to the next 2 months. Now the next 2 months, like I'm saying, even Mumbai would be a separate ball game altogether, maybe, but in many other cities, many other towns, people have started working, people have started, factories are running. Even if I'm from Vadodara, and if I see here also that factories have started working maybe on a low attendance, but they have started working since the last almost 15-20 days. So we also need to examine that what would be the performance, or we have to take the projections from the company that even 1.5 months of lockdown is there, or 2 months of lockdown is there. Now how do you project the next 10 months, or maybe I would say 12 months after the 2 months? Maybe I might extend up to May 2021 for that matter, to find out what is the next 12 months projections and whether that is reasonable. Now if there is there are benefits or loans that have been given, there are deferment of principal amounts that have been given. Now there might be cash flow funding problems which the promoter from his personal resources would be able to bring in. So there are so many factors which we need to consider before we actually say that this is not a going concern. And once we say that this is not a going concern, then we have no choice but to prepare the financial statements on liquidation basis. That means all my assets and liabilities has to be at NRV, and we will have to go as per that. So I believe that going concern is something that needs to be checked very, very much into detail. And some of the mitigating factors which I believe can be that, whether in the next, like I said, in the next 10 months or so, the client is willing to reduce capital expenditure, so अभी जो भी उनका capacity है उसी को proper efficiently run करके and make good the loss or whatever. There would not be dividend payouts. Like from RBI perspective, they have asked all banks not to make any dividend payout, right? Then there are non-performance based bonuses, तो उसको postpone कर दिया. We have come across so many companies also where they are saying we are reducing salaries by 10%. We are sacking employees. So all these are going to reduce the cost. Socially might not be good, but from a going concern perspective, they would be reducing the cost. So working capital reduction, asset liquidity, these are the various ways in which money can be brought in, and going concern as a fundamental accounting assumption might not get violated. So I would request and urge members that you can go into, if there is any specific issue, I am always available for discussion and we can discuss on that. This was one with respect to the type of audit or the situation in which we are presently doing the audit. This I found in case of SBI Life Insurance, where they said that the audit processes were carried out based on the remote access to the extent available, feasible, and necessary records made available by the management through digital medium. Our opinion is not modified in respect of the above matter. If you ask me, for our clients, in most, we are not putting such a note, because by way of the access to the system, the sharing of documents, we have a lot of video conference calls with our clients almost on a daily basis. And if I look from an audit procedure perspective, that I am doing similar procedures which I would otherwise have done when I would have visited the clients. वो vouchers मेरे को वहाँ पे दिखाते हैं, वो लोग अभी scan करके mail कर रहे हैं. जो interaction one-on-one होता है, that we are doing through video conferences. I am reviewing everything. मेरे को उन्होंने SAP या है, Tally है, जो भी है उसका system का मेरे को access दे दिया है. तो वहाँ पे जो मैं system access करता, otherwise by visiting the client location, I am able to do from home. So most of the things I believe from my office, what we are doing right now is in sync with which we would have otherwise done. Yes, there would not be 100% comfort, like I said in the beginning, that we are doing audit under a typically, मतलब ये कोई हमने कभी पढ़ा भी नहीं था, हमने कभी सोचा भी नहीं था ऐसी situation है, and we are still doing that there would be some sort of a mental discomfort, but otherwise from a process, I feel that there are no major gaps that we have observed. And if you look, you download, there are so many results that have come up. Like I said, even for going concern, in case of none of the banks, see, banks would be the first one which would get impacted otherwise. None of the banks have put that as a going concern, as a violation. With respect to inventory also, with respect to such disclosures on the remote access, I have found very, very few. And honestly, I'm coming out with these disclosures we put on WRC website every weekend. So I have gone through so many of the listed companies, and I found मेरे को ये एक ही मिला from which I went through, and therefore I thought it to be shared. कारों में, like I said, fixed assets, physical verification अगर नहीं हुआ है fixed assets का, तो that is one thing which we need to see. Inventory we've already discussed. Statutory dues, there is already an extension which is available for the payment of statutory dues, so we need to consider that when we are doing under caro. Repayment of loan also I have discussed that what we need to consider. And in my view, we need to give the necessary factual disclosures without any modification or any qualification. Friends, I would come to that end of my presentation, sharing this slide. These are the audit related publications which we released, and I am happy that I was chairing all these three teams. Insight into caro reporting, the anthology on key audit matters and other reporting in audit reports, and also on the SEBI prohibition of insider trading regulations in case of listed companies. My request to all the participants here is these are very much available on the WRC website. Please spend some time, download them, share it with your teams, utilize this time, and I assure you, you would definitely be get some qualitative output out of these publications. And as far as the anthology on CAM is concerned, we've already also put it on the WRC website with a search engine, because there are more than 1200 items that we have compiled in this publication, which was not possible in the hardbound copy. And therefore, we have given a search engine on the WRC website to facilitate, and you can search and take it in Excel or PDF based on the industry-wise classification or type of reporting. So my request to all the members over here is please spare some time. If you are busy, ask your team member, somebody to download this, and I would assure you that you would definitely find some value addition out of this. With this, I end my presentation. I thank all of you, and especially the study circle conveners, coordinators, for giving me this opportunity on a Sunday morning to interact with you all and share my thoughts on some of the audit practices and processes where I feel discussion was required. Thank you very much.
Thank you, sir. Thank you for excellent, informative, and lucid presentation. Also, thank you for sharing the practical aspects of the presentation. We are actually running short of time, but if there is any, there are any one or two additional questions, then Chintan, you can, if it is there.
Yeah, so I have, from the chat which the members have put in, Vishal bhai, I'll just share one or two questions which the participant have put there. So you can please answer them. One of them, first is that everybody has requested you to please share the Excel sheet as well as the PPTs, whatever you can within your permitted, form philosophy.
Sure.
Yes.
See, why to the members, why I shared is that I wanted to create this awareness that as professionals, there are some good, where I tell one thing to everybody, that when it comes to our service to our clients, we advise our clients on a lot of internal financial controls, on the best practices they should have in their businesses and everything. But when it comes, I always believe charity begins at home, and therefore it is very, very important that we put similar internal controls in our office reporting mechanism also.
Yeah, Vishal bhai, one question which member has put is, with reference to property plant equipment, how can significant components be shown under each head in the schedule? There was one question which somebody has put.
Yeah, so see, significant component are not required to be shown. Significant categories are required to be shown. Now within plant and machinery, so what would be happening is that, let us say you would be having 2 or 3 different depreciation rates. So from your accounting perspective, in your SAP, in your tally or whatever, you would be having such 2-3 depreciation ledgers so that can get captured. But that whole thing would come as a single line item under property plant equipment. So you, in your policy, you would say that there is a componentization which you have followed as a policy. But when it comes to the disclosure, everything would come under property plant equipment, but those different line items you can put as part of your working papers or in the subschedules.
And one more question was that if advance is given against goods, then after 3-4 months, the contract has been cancelled and the advance was returned in the next year. So would it be violation of the deposit rules?
See, I would say that 3-4 months, because see, the logic, the rules say that for 365 days. Now, if it has got cancelled in 3-4 months and still you are holding back the money and giving after 365 days, right? So that is where the challenge would come. Therefore, my suggestion is that we should advise our clients that whenever such, we should give a checklist to our clients also. Bhai, aisa aisa hota hai, to aap ye immediately de do. So I would suggest, because the penalties for acceptance of deposits are very, very harsh. Violating the acceptance of deposits are very, very harsh. Second is what happens that as a chartered accountant, for us, we are certifying DPT3. We are also certifying the CARO, where there are specific references required that whether this is a violation or not. If you ask me that if a contract has been cancelled in 3-4 months and if you make payment immediately, then it is fair, there is no violation. Immediately means I'm not saying the very next day, maybe in a reasonable time of 15 days to 1 month. You can still justify that when cash flow is permitted. But if it is cancelled and you still hold for 365 days and then you still don't repay and there is a violation, I feel then there is a violation and has to be reported.
So I think that's all from the question side of that. And now,
Okay.
conclude, anybody, any question is there, member, please put it on the chat box. I'll ask Vishal bhai. I think there are none, Vishal bhai. So great
Yes.
thanks. And please also apologize, accept the apology for pestering you, because I was after you to have this session, and really appreciate Vishal bhai to take time out of his busy schedule, because he is auditor for many listed companies and the extended due date for listed companies has been to June. So his schedule has got extended, but in spite of his busy schedule, it was very grateful and the session was very informative. Really grateful to Vishal bhai. We all on behalf of JB Nagar Study Circle propose a very hearty vote of thanks to Vishal bhai, and looking forward to see you soon in person.
Yes.
Thank you.
Sure.
Thank you very much. I hope the members should not pull you up for pestering me. That is important.
Thank you.
Thank you.
For the wonderful
Everybody,
session.
please remain safe, healthy, and we wish to meet in person very soon.
Thank you.
Yes, sure. Thank you.
Thank you.